Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. It's a volatile day so far. We have seen recovery on the Nifty led by some of the moves in the IT space. Midcaps continue to be under pressure, and giving that company is Bank Nifty. It feels like a Friday today, actually, Vivek. So right. I think markets are in that mood as well.
I think we're celebrating the closure of the earnings season.
Oh,
that's
for
right.
sure, for sure, absolutely. But yes, a lot to catch up on the show today.
Absolutely right. Quite a lot lined up, a lot of management and some interesting analysis as well that we have in store for you. So let's start off with the top headlines. Stocks trade in a range ahead of the US CPI print later today and the Independence Day holiday tomorrow. Pharma, healthcare and metals drag while IT stocks eke out gains. Mid-caps underperform.
The Supreme Court allows state governments to collect past dues on mining from April 2005 in the form of royalty and tax. It, however, directs states not to levy interest or penalty on the past dues and collect them in a staggered manner over 12 years. The move can be a big blow for miners.
SJVN gains after reporting a good operating performance in Q1. Revenue and net profit rise and the margins expand on a yearly basis. The board has approved monetization of Nathpa Jagdeep Hydro Project Station and stake dilution in wholly owned subsidiary SJVN Green Energy.
Piramal Enterprises slumps over 8% on the back of negative commentary from the brokerages. CLSA downgrades the stock to underperform and cuts the target price to 860 rupees a share. Jefferies also issues an underperform call and a target price of 805 rupees a share. Okay, all right. Those are the top headlines. What is powering the markets today? Of course, it's not powering through, but we've come off from those highs that we saw at a point in time. The Nifty was up around 50-60 points. It has come off from those levels, but the IT pack is doing really well. So that should be on your radar, 1.4% higher. But it's only 4 sectoral indices in the green right now. Barring that, all of them in the red, and a lot of pressure coming in the broader markets. So the advance decline ratio in favor of the declines as well. As Vivek was mentioning earlier, we are towards the end of the earnings season. We're almost done with it, actually. It's independence from earnings season as well. So a lot of reaction that we are seeing, some of the stocks in profit booking. But yes, it is going to be very volatile. That is what the indication is. But we'll have to see which way things go, because that big trigger for earnings, that's gone away now.
Big trigger for earnings, we saw very sharp individual stock reactions. And even today, if you pull up a couple of stocks, have a look at a name like Piramal Enterprises. Stocks seen quite a bit of a correction after a muted set of numbers. On the back of news, so you see Divi's Lab, that stock was down almost 5%. So individual stocks continue to see very sharp reactions, either on the back of muted earnings or earnings, and also some negative news flow coming in. But quite a lot of stocks on our radar. This is our special segment, Midcap Movers. Hormaz is at the wall to take us to the midcaps that are moving around in the session.
It's a double whammy because it's the expiry as well for the Nifty and the Nifty Bank. The indices are managing to stay afloat, but then of course the broader markets are not doing very well as we speak. And some of the top losers, Suzlon, the high flyer over the last 5 trading sessions, crossed the mark of 80, is now in a lower circuit of 5%. Ipca Labs, Century Textiles, Hindustan Copper is out of the FNO ban today, and that is why now 4.5% lower. Well, it's independence from earnings, but stock reactions continue because of that. There are a lot of earnings reactions coming in. Piramal Enterprises, as Vivek just mentioned, 10% lower now. Some negative brokerage commentary coming in there as well. HEG announced a stock split, but the earnings were a disappointment, 7.5% there as well. MTAR Tech is off the lows of the day. We'll speak to the management in just a bit. And EPL, of course, doing very well. The top gainer on the Nifty 500 today, 14% higher on the stock. The last 2 bits of PSU names that are going to report earnings today, they are the ones in the spotlight. HAL recovering from the lows of the day, ahead of numbers, just 0.5% lower now, but the stock has corrected 20% from its record highs. As has Mazgaon Dock, which is also going to report earnings later today, 1.5% lower ahead of the results. Stocks that are doing well on the back of very strong volumes, and on the gaining front, there are quite a few of them. PB Fintech is one of them, off the highs of the day, but still 6.5% higher. V-Guard has come off very sharply from the highs of the day on the back of very strong volumes. At one point, the stock was up 8% this morning, now has slipped into the red. And SJVN, another earnings reaction, almost 5% higher. And lastly, some other stocks that are bucking the trend in today's session. Those include the likes of Chennai Petro, that's up 8%. PCBL and First Source continue to move in a league of their own. And Paytm at the highest point of the day now, up 6% as we speak. Back to you guys.
Okay, some interesting moves there, Hormaz. Thank you so much for joining us today, and have a great holiday tomorrow. So that is our Midcap Movers segment. But Lumax, that's the stock on our radar now. Quarter one was a steady quarter for the company with revenue and profit registering good growth, but their operating margins, they've declined slightly on a YY basis. To discuss more on their quarter one performance, Anmol Jain, the MD at Lumax Auto Technologies, is joining us now. Mr. Jain, good afternoon. Thank you so much for joining in. Quarter one has been steady for you. So is it fair to say you stick to your revenue growth guidance of 20 to 25% in FY25 and margins at 13%? Because there was a slight blip on a YY basis if we remove the other income component in margins. What's the margin outlook?
Good afternoon, Sonu. Thank you very much for having me. So number one on the forecast on the revenue, I think we did a pretty good start to the year with a 20% growth in quarter one. My still guidance for the full year remains between 15 to 20% on a consolidated basis. We all have heard headwinds in the passenger vehicle space, which does account for 50% of the revenue pie of this company. So we are cautious but optimistic. So I think in Q2, we do expect a bit of a slowdown in terms of the growth rate. But for the full year, I would still expect a 15 to 20% guidance for the top line growth. As far as the margins grow, I think we've always maintained that we would first like to get to the teen EBITDA margins. And I think for the last many quarters now, the company has sustained almost close to a 14% EBITDA margin, which is what it reported in this quarter as well. And my guidance would be we would be able to sustain this margin going forward as well.
Just a follow-up on the guidance, revenue guidance, because the last time when we'd spoken to you in May, you indicated the revenue guidance could be 20 to 25%. Is the slowdown that you're expecting in quarter two leading to this slight cut in guidance?
So I would say that, yes, the guidance of 20 to 25%, we are just tapering down by 5%, primarily because of the volume offtake being low in Q1, and we are expecting in Q2 this trend to continue. So for the first half, I think the guidance would be lower. However, on a back of a strong order book and certain new models and new product introductions, which primarily go in H2, we are hopeful that H2 would be a much better growth 2 quarters for us. So for the full year, I would still say close to 20% should be doable. But yes, for the full year, it would be definitely slightly revised from my earlier guidance by about 3 to 5%.
Mr. Jain, thank you so much for the clarification on that front. Even OEMs have mentioned that the passenger vehicle market has seen some slowdown. Now, coming to one particular segment of yours that's doing quite well. First up, if you could confirm where your current order book stands at. We understand it stands at close to 1,000 crore at the end of Q1. Secondly, how is business shaping up as far as the IAC subsidiary is concerned, which primarily does work for Tata Motors? We understand that particular segment has been doing quite well. Give us numbers in terms of what is it that you're guiding the street for.
So number one, Vivek, on the order book, you're absolutely right. The order book as on Q1 stands at about 1,000 crores. I would think in this year, about 25% of this order book would come into the revenue stream already. And almost close to 50 to 60% of it would come into FY26. A large part of the order book, close to almost, I would think, 70 to 75% would be in the passenger vehicle space. And clearly, we expect a larger piece of the pie of the revenue going forward to be from the passenger vehicle space, because the content per vehicle in a passenger vehicle is much more than that of a two-wheeler. So strategically, that's where we want to position the company. Specifically talking about IAC, just one correction, IAC's largest customer is Mahindra and Mahindra. While we do some amount of work for Tata Motors as well, but Mahindra is the largest customer there. We are pretty bullish. Out of this 1,000 crores, almost 400 to 450 crores of the order book rests with IAC India. For the first quarter, IAC also saw a 19% growth in its manufacturing revenue on a year-on-year basis, which is pretty much in line with Mahindra's own growth of 15%. But we do continue to expand our footprint of customers in IAC India. We are in discussions with multiple other OEMs to expand our wallet share. So pretty optimistic, because going forward, the interior space of a vehicle, which is where IAC operates, is going to massively transform into becoming roomier, the smart surfaces, sustainable materials,
Right.
lighting. So we're pretty excited about ISE India going forward.
Mr. Jain, what I meant to ask is, from Tata Motors specifically, what is the kind of visibility that you're seeing? Also, we understand that you are on the lookout for inorganic growth. Have you zeroed in on any acquisition targets?
So Tata Motors continues to be a strategically important customer. I think only about close to some 5 or 10% of the revenue of Tata of this company comes from Tata Motors. But I think the growth prospects of Tata Motors with this company are huge. Because of its diverse product portfolio, we are engaged with Tata Motors on multiple products for their forthcoming platforms. In terms of your question related to
Inorganic growth, yeah. Inorganic growth.
Inorganic growth, I think, Vivek, we always kind of been on the lookout for. Currently, also the company is evaluating 2 to 3 opportunities. These are, areas which the OEMs are in need of, or which are strategically a good fit to our core competencies. So I would assume that probably sometime later this year, if some things fructify, I should be in a position to give you more information. But yes, we continue to be engaged for inorganic growth as well.
Is there a kitty that you've set aside for acquisition, since you're saying something could be finalized this year itself? And what does that do to your debt? Because there was a plan to cut debt this time. How do you plan to fund the acquisition if something does fructify this year?
So I'm happy to share that the company is already sitting on free cash of more than 400 crores. So we have a pretty strong, pool of resources internally to invest and do in inorganic growth if required. But I think apart from that, the debt equity ratio is quite healthy. So the company does have enough capacity to raise debt if it's needed in the future.
Thank you so much for your time, Mr. Jain, and answering all of our questions patiently. We'll get you once again on the show, when you do make that acquisition that we've been waiting for. Let's now slip into a short break. When we return, we will be joined by the management of MTAR Technologies to discuss the Q1 numbers and the way forward. Welcome back to Midcap Radar. We are immediately moving on to the next management we have on the show. That's MTAR Technologies. It saw a subdued quarter in Q1. The company saw a revenue decline of 16% and margins also contracted on a yearly basis. To discuss further, we have Srinivas Reddy, the managing director of the company, joining us now. Good afternoon, Mr. Reddy. Any way we look at it, Q1 was a subdued quarter for the company. At the start of the year, you did give us a guidance of close to 30 to 35%, and this was trimmed from the 40 to 45% that you had earlier envisaged. After Q1, which saw a revenue decline, will you be trimming down the revenue guidance for FY24 for FY25 further? And also, what will be your revised EBITDA margin guidance?
Look, we are not trimming down any guidance as of now. We stick to our 30-35% revenue growth for this year. We can't judge by just one quarter. We have very strong 3 quarters coming up. As we have mentioned, our Q2 numbers are the highest. We would achieve the highest amount of revenue in Q2 itself, which is around 200 crores plus. And we continue to go in the same momentum over the next 2 quarters as well. So we stick to our guidance and also the EBITDA margins of 22% plus minus 100 basis points.
Okay. Mr. Reddy, good afternoon. Thanks for joining in. Your order book stands at 894 crore rupees. What is the year-end order execution or order book target that we can look at for FY25? And what kind of recovery are you seeing? Because you're sticking to the guidance. So what's giving you the confidence that the rest of the year will be strong? Which sectors are contributing to the growth that you're talking about?
We're looking at all the sectors. Basically, the aerospace sector, which we're doing pretty well compared to last year. The clean energy has picked up. We are back to normal right now. You must have seen the number of units that we are sending now is much more than what we used to send earlier. All the filters have been done. The new product is done extremely well. Similarly, we are pushing on the other sectors as well, in nuclear as well. So we are pretty much confident in terms of achieving our guidance numbers over the next 3 quarters, and including the EBITDA margins based on the high revenue base what we have.
And order book, yes, please go ahead.
I'm coming to that. So we are going to close at an order book of 1,500 crores. We have a very strong set of orders, a lot of inflows coming in second half of the year, especially nuclear. We're looking at more than 650 crores of orders coming in. Aerospace sectors, clean energy sectors. So we have clearly drawn out our plans regarding that. So we will close at about 1,500 crores of order book by end of the year.
Okay, and out of the 1,500 crore order book that you're envisaging, a significant portion, like you mentioned, will be coming in from the nuclear space. What is the current situation as far as one of your important clients is concerned? How is Bloom Energy doing? You've mentioned that you expect some recovery there as far as the second half of the year is concerned. Can you quantify the kind of order inflows you could see from there?
It's already doing pretty well right now. If you look at the Q1, we have done, like, for example, the numbers speak by itself. We have done about 815 units. And Q2, we are planning for 990 units, which is way above the requirement. They're pulling in a lot of their requirements right now. They backed substantial orders from various data centers. Things are moving very well right now with the new product. So we're expecting a lot more orders to flow in this over the next 2 quarters itself for the current financial year. So it is going to beat the numbers what we have expected initially of 3,300 units. Probably might even exceed that. But we are not taking that into consideration. So based on what we are doing today, we are pretty much confident about where we stand in terms of our guidance, in terms of all the sectors that we're looking at.
Okay, you're sounding positive, and it has come in after some time because there was weakness that we saw in FY24 as well. Mr. Reddy, I wanted to understand the export situation because the freight rates are higher. People are talking about, or companies are talking about unavailability of containers as well. You do have a sizable portion coming in from exports. Is there any issues that you're facing which could potentially be a problem?
There is an issue. I'm not saying that there's no issue in terms of exports, containers availability, but we have taken that into consideration. For US, I don't think that's such a major issue, but for Europe, yes. But most of our exports are to the US. So I don't think we'll have a situation as far as exports are concerned. Imports, we have made sure that we have taken such delays into account while planning in terms of the supply chain issues. We have done that already, and we are on track with that as well.
Okay, Mr. Reddy, thank you so much for joining us and clarifying on all of our queries. We'll now slip into a short break. SpiceJet will report its first quarter numbers today. We will put the spotlight on the company's performance and financial health on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. The stock to focus on will be SpiceJet. It will be releasing its first quarter numbers today. What should you expect? Madhiya Mujawar is here with the airline's performance and financial health record that we know so far. Madhiya, take it away.
Well, SpiceJet has been facing liquidity crunch for quite some time. So how the management plans to improve the situation is something we need to watch out for in the earnings. So far, its performance metrics are showing a declining trend, like the number of passengers carried is down from 7.4 lakh in January to 5 lakh in June. And the 5 lakh number is against 1.32 crore total passengers that were carried by all airlines put together in June. So that naturally impacted SpiceJet's market share that came down from 5.6% in January to 3.8% in the month of June. Now, all that hit SpiceJet's punctuality. The airline had the worst on-time performance among all airlines of 46% in June. And we can relate the declining passenger number and the market share to the airline's shrinking capacity. SpiceJet's available seat kilometer is down by 30% from 7.72 7.72 lakh in January to 5.45 lakh in June. Now, all this has led to a deteriorating financial health and a worrying track record. Like SpiceJet has been making losses at net level for past 6 years and an operating level for the past 3 years. It has a negative net worth for many years and has borrowings of over 1100 crores. The airline has lease liabilities of 4,000 crores, and that's also the reason why so many lessors are taking the airline to court seeking their payments. Moreover, SpiceJet fixed assets value has depreciated to 2,500 crores, and the negative operating cash flow of 600 crores in FY24 also makes servicing of the finance cost of 100 crores a big challenge. So let's see what the management says in the earnings that will be released today.
Thank you so much, Madhya, for taking us through, what exactly to watch out for in terms of SpiceJet. The stock is sulking today, down by close to 1%. But that's all the time we have on this edition of Mid Cap Radar. Your stocks when we return.